Thank you. And thank you to all our listeners for joining us on this conference call to discuss Partner Communications' second quarter results for 2015. With me on the call today is Isaac Ben-Benisti, Partner's CEO, and Ziv Leitman, our CFO. Isaac Ben-Benisti will first discuss Partner's strategy for both the cellular and fixed line markets. He will then hand over to Ziv Leitman, who will provide a detailed overview of the financial and operational results for the second quarter. And finally, we'll move on to the Q&As. Before we begin, I would like to draw your attention to the fact that all statements in this conference call may be forward-looking statements within the meaning of Section 27A of the U.S. Securities Act of 1933 as amended, Section 21E of the U.S. Securities Exchange Act of 1934 as amended, and the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Regarding such forward-looking statements, you should be aware that Partner's actual results might vary materially from those projected in the forward-looking statements. Additional information concerning factors that could cause actual results to differ materially from those in the forward-looking statements are contained in the Partner's press release dated August 12, 2015, as well as Partner's filings with the U.S. Securities and Exchange Commission on Forms 20-F, F1, and 6K, as well as the F3 shelf registration statement, all of which are readily available. Please note the information in this conference call related to projections or other forward-looking statements is subject to the previous harbor statement as of the date of this call. For your information, this call is being broadcast simultaneously over the Internet and can be accessed through our website at orange.co.il. If you have any further questions following the call, please feel free to contact our Head of Investor Relations and Corporate Projects, Liat Glaser-Schaft, on 972-54-781-5051. I will now turn the call over to Partner CEO, Isaac Ben-Benisti. Isaac.
So, hello everybody, good day, and welcome to our earnings conference call. The second quarter results reflect the continuing competition in the telecom market in Israel, alongside of seasonality effects and the positive impact of the company continued focus on equipment sales. We continue our strategy to becoming a full-service telco group, offering quality services and sustaining our technological excellence. We're adjusting our business model to the changing telco market while operating in various aspects within the market and improving value to our customers. As part of these processes, we have launched additional services among others. For the business segment, we have launched a new data center in the beginning of July 2015 in managed services model, and we have started offering more significant integration solutions. For the private segment, we're offering bundles under the Orange 012 brand, which includes both cellular and internet services, in addition to our wholesale offering of broadband and ISP as one offering. Looking ahead, we intend to becoming a significant player, furthering competition in the fixed telco market. However, in order to become a significant player, the regulatory environment needs to set the ground for a fair competition between all players in the market. In the cellular market, there is a need to enforce on all the players their obligations to invest in infrastructure, and this is very significant. In the fixed line market, the Ministry of Communication needs to implement in full the service portfolio, which is recently determined as part of the wholesale market reform. Furthermore, essential conditions for effective competition in TV, fixed telephony, and broadband market are the removal barriers to competition and the preservation of the existing structural separation requirements of Basic and HOT. Up until the point that the new market players have reached a significant market share, and this is something very significant, as I mentioned before. In conclusion, we're already beginning an experience of benefits from offering added value to our customers through our wholesale offering. Past investment in our 4G sites will be realized in full now that we have received the frequencies awarded to us in the 4G frequencies tender. Together with the frequencies allocated to HOT Mobile, we're able to realize a full 20 megahertz band and enable our customers to enjoy significantly improved data experience. We will continue our aspire to bring our customers additional value in the telco world. And now, in permission, I will tell the call over to Ziv Leitman for a detailed review of our financial results. Please, Ziv.
Thank you, Isaac. Before diving into the financial results for the second quarter, I would like to remind everyone that all the comparisons I discussed in my prepared comments are to the first quarter of 2015, unless otherwise indicated. The competition in the cellular market continued to erode service revenues. However, this was partially offset by the effects of the seasonal roaming revenues. In comparison to the intense competitive environment in the first quarter of 2015, the level of competition is slightly, as demonstrated by the decrease in the churn rate for cellular subscribers. The churn rate stood at 10.9% in the second quarter compared to 12.7% in the previous quarter and 11.4% for the same quarter of last year, reflecting a decline in postpaid subscriber base. Cellular ARPU totaled 70 shekels, a slight increase from 69 shekels in the first quarter of 2015, which reflects the impact of seasonal roaming revenues, as I have just mentioned. Equipment revenues decreased by 8 million shekels compared to the previous quarter. However, gross profit from equipment sales increased by 8 million shekels, mainly due to improvement in supply chain and a change in product mix. Operating expenses decreased marginally by 3 million shekels, primarily reflecting our continued efforts to reduce the cost structure. EBITDA increased by 9 million shekels compared to the previous quarter, mainly reflecting the improvement in equipment sales profitability. Finance cost net totaled 46 million shekels, an increase of 28 million shekels compared to the previous quarter, mainly due to higher linkage costs from the significant increase in the consumer price index level. Profit totaled 9 million shekels compared to 25 million shekels in the previous quarter, despite the increase in EBITDA, mainly reflecting the increase in finance costs. CapEx payment totaled 110 million shekels compared to 127 million shekels in the previous quarter, a decrease of 13% despite the one-time payment for the 4G frequencies. The decline in CapEx was mainly due to lower level of payments to suppliers for fixed assets received in previous periods. On an accrual basis, investment in fixed assets totaled 84 million shekels, including 34 million shekels for the 4G frequencies, compared to 50 million shekels in the previous quarter and 94 million shekels in the same quarter last year. Free cash flow before interest payment totaled 24 million shekels, compared with 21 million shekels in the previous quarter. The increase in free cash flow mainly reflected the decrease in CapEx payment together with the increase in EBITDA, which were partially offset by a larger increase in working capital. For the first time in 4 years, free cash flow after interest payment was negative, totaling minus 28 million shekels, due to the continuous reduction in EBITDA, increase of working capital, and semi-annual interest payments. Net debt at the end of the second quarter amounted to approximately 2.6 billion shekels, which reflects the increase of 45 million shekels as a result of the negative free cash flow and the impact of the increase in CPI. Last month, the company reached understanding with employee representative and the Histadrut Labor Organization regarding a retirement plan. This was the first step to a collective employee agreement. As a result, the number of full-time employees is expected to decline by approximately 350, and a one-time expense of approximately 35 million shekels is expected to be recorded in the third quarter of 2015. we expect that the company may record a loss in the third quarter of 2015, due mainly to the one-time expense of the employee retirement plan, as well as the negative effect of the continued intense competition in the telecom market, partially compensated by the revenues from the new framework agreement with Orange. I will now be happy to open the call to questions. Moderator, please begin the Q&A.
Thank you. Ladies and gentlemen, at this time we will begin the question-answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you're using speaker equipment, kindly lift the handset before pressing the numbers. Please ask your questions in a loud and clear voice. Your questions will be pulled in the order they are received. Please stand by and pull for your questions. The first question from Gilad Alper of Excellence. Please go ahead.
Hi. Just a question, assuming for a second the best case scenario, let's say the Ministry of Communications stays staff with Golan and insists that Golan Telecom invests a lot of money in their own network, and as a result Golan decides to exit the market. And then, you have a sort of a consolidation, the number of operators drops from 4 to 5. How fast and how high do you think ARPU can rise if something like that happens? Thanks.
I believe that of course, if Golan will go for the market, and I don't believe, by the way, this will happen, even if the Ministry of Communication will enforce him to make the investments. But if it will happen, I don't believe that in the short term we'll see an increase in ARPU, because Golan is not the only competitor in the market. We have 4 other competitors that are very aggressive. But I do believe that if something like this will happen, then I do believe now, when the Ministry of Communication saying that they will enforce Golan to invest and not allowing him to continue acting without with no related to his license, it affects the market, that and there are signs, okay, that we're in a point that it might, be a point that the ARPU will increase. When it will happen, what will be the effect, it's early to say.
Okay, thank you.
If there are additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by and pull for more questions. There are no further questions at this time. Before I ask Mr. Bensky to go ahead with his concluding statement, I would like to remind participants that a replay of this call is scheduled to begin in 2 hours. In the U.S., please call 1-888-326-9310. In Israel, please call 03-925-5901. And internationally, please call 972-3925-5901. The recording is also available on the company's website at www.orange.co.il. Mr. Bensky, would you like to make a concluding statement?
So I just want to thank you very much attending this call, and thank you very much.